moving, but
Yeah, no, I'm definitely gonna have it set up correctly at my new spot. That's for damn sure. Let me post the
like having the miners
screen.
on wireless, you know?
I forget I even have those damn miners, honestly. They're on wireless at half the places they're
Like
at.
having the
'Cause
miners on. Yeah,
got,
same.
yeah, because people, it's like, hey, can I run this cord through your entire house? And then, like,
Let me
you
drill
know,
this hole in your attic.
yeah, like, no one's gonna do that. Yeah, and it's like, here, you actually get the, get like a cut of like 79 cents every month after the bear market hit. No, that shit is obliterated,
It's
bro.
crazy. I topped out at 7K, and then now it's like, dude, like I think I'm at like 2
Damn,
or
I never even
3K.
got that high. I was like, I was selling mine though. I mean, it might have gotten close, but I definitely I sold the fuck out of mine. Like every 2 weeks, I was selling that shit. There was no hodl gang for me on that one. Let me post this up so everybody gets in here. Sorry, I was a little
Yeah,
late.
I think Mangling did the best on all those.
Mangling,
Out of all those, yeah. Manny
mangling,
Mang,
mangling.
Money Mang. I know because he was telling me to sell at the top at like, what was it, like 40, when it was like $60, right?
I just sold that shit like every 2 weeks. Oh yeah, dude, USD CAD. I knew that shit was gonna start moving because I wasn't gonna take this trade, but like I've been watching it for a while. Why is this over here? What the fuck? I've been watching it for a while, and I literally have been plotting on this low, and it reacted exactly how I freaking wanted it to off the low. So like mainly what I look for if I'm playing like a liquidity rate on like a daily level, I'm just gonna delete this because it's just getting on my nerves. But what I'm looking for, like when we raid like daily liquidity like that, is exactly this. So I got some people were asking me questions actually on how to play liquidity raids. Which for those of you that are in the Discord, we had a private class on those this past Saturday, I think, or was it the Saturday before? I think it was this past Saturday. But
Yeah, I think so.
yeah, but uh, mainly what I look for, and somebody asked me if I look for, how do I look for 'em on low time frames, and it's just like everything else, it's all the same, right? If I'm applying a formula to price, I'm going to apply it to all time frames because at the end of the day, we're just using these, I guess whatever you want to call them, patterns, strategies, whatever you want to call it. All we're doing is we're identifying what's going on with the market. So if I want to know what's going on with it on a daily time frame, or if I want to know what's going on with it at a 1 minute time frame, it literally doesn't matter. There's no difference. It's just about establishing, your higher time frame bias and then framing the low time frames around it. So, for instance, if I didn't have, this is a daily level. Well, am I going to wait for the daily to give me signs of a liquidity raid? Well, by that point, it's over with. The trade's already played out. So what I can do is then go into my intraday time frames, like a 1 hour. You can use a 4 hour if you want. And what I'm looking for is price on a lower time frame. I usually like the 1 hour, the 15-minute for this, but I want to see an expansion. So like we can see displacement. So you don't, when you're playing liquidity rate, you want no question, absolutely no question that smart money is buying this dip, right? They're buying those sell stops. How do you tell that? By displacement. It takes a lot of money to move price like that in a forex market or any market that we're trading with. And like even if it's crypto or not like some super low cap stuff, but once you see something like this with a break of structure, here was the change of character right there. Once you see that, um, that's a good indicator that smart money's involved. Now that's just kind of like your entry trigger. Now, let's say if you wanted to refine it more, if you're going to use the fair value gap entry model, if we look right here, here was our fair value gap. I always recommend taking a fib and finding where the discount is. So if you see price came into the discount of this POI and then railed from there. All right, I didn't even set limits. We called this signal on the Discord this morning, like as it was starting to pump. I mean, it was like immediate. Within 5 minutes, we started moving. But just the only thing for me was I looked at it and I said, okay, well, we're back in my POI. The stop loss, I just, could I have refined here? Maybe. I could have waited for this right here. So look, we had a break of structure over here. So you broke structure, fair value gap. Look what happened here. Broke structure, fair value gap, entry. Could have done it like that with a stop loss under this. I was happy with the current risk to reward. This is something I've been plotting on the daily time frame for a little bit now. I wanted this equal low to get taken and come up. Then I think we can make a nice little push up. Now, this is all going to depend really. Um, I think that we're going to be reversing at some point here just because of our overall bias on DXY, but I would like to see like this daily order block or this imbalance get traded up into, because it looks like prices remove the sell side. So once we come out and we take out the sell stops, it's going to go back up to take out these local range buy stops and also fill in any of these imbalances where orders weren't filled. Same with this order block, it needs to be mitigated because smart money caused this move up in order to induce retail traders to buy so that they could sell to them. So I think the overall narrative here is that we're going to, retrace back down into maybe these areas down here. But if we look at the weekly swing structure is pretty bearish here. If I'm looking at the weekly, I'm looking at this right here. I know it's huge, but to me, this is not a weekly pullback. Um, yeah, that's being a little bit more, I guess, liberal with my structure. But I look at it like price is coming back into a premium or coming towards it. And at some point, we're going to see a reversal and this weekly string structure continue. This also kind of pairs up with our bias on DXY that it's in that monthly supply coming up to the weekly fair value gap. I think that we have probably a little bit more life in it, but at some point we're going to see a retrace. So we're just, I'm kind of just building the narrative from the top down. But in order for us to start to move to the downside, I think we just cleared. Oh, almost. But in order for us to start moving to the downside, we need to come up and mitigate these orders if this is going to be the final push. I'm not going to try to predict the future, but I can build my narrative around that and then frame trade ideas around that story of what's happening. So that's a little breakdown on this. It was super good trade. I mean, literally, there's no drawdown. It's up like what? I don't know, like 45 pips, 50 pips, whatever. Round it up, round it down. Either way, we're making a nice little bag before FOMC. This set up a lot. It looks like it's going for this first profit target right now. Bitcoin was another trade that we took. Damn it. It wants this TP, doesn't it? It wants it bad. But so I took this yesterday. We called this out on Twitter. Let me show you. You can see. If you're not following me on, you can follow it because I don't post any kind of signals. All that's exclusive to the Discord, but I do give free sauce if you take it and do it. If you know what you're doing and you've been paying attention to the streams, then you could have capitalized off this. I told you guys that it was going to go down to this previous weekly low, 2764. Alerts have this level looking for M15 confirmation to M5. So what do? Did exactly what we anticipated. We came down. The early bulls wanted to long off this order block. Even smart money got faked out there because you got a confirmation. And this is why it's important to understand liquidity. So look, let's say you're a smart money trader and you had that 4-hour POI and you said, okay, well, I'm going to trade the first break of structure on the 15-minute. Okay, look, you got to break a structure there. So then you would have said, okay, well, I've got this big demand zone. I'm going to push this over. Now I need a 5-minute break of structure off that level. What happened? Price gave you that. The price broke it. So then what happened? Came back 5-minute demand zone. Did the 1-minute give you confirmation? Yeah, it did. So why did you get stopped out and have a short-lived trade? Well, because you didn't pay attention to the higher time frame level of liquidity. We had an imbalance under this right here, and even smart money, a ton of people, I'm sure, maybe even some people that are watching this, got faked out by that order block. I'm almost positive there's people in the server or people trading on their own that did. And the reason that I wanted to wait was because, for one, it's a clean low with an imbalance below it. Also, if we're looking at levels of liquidity, it's the previous weekly low. Institutions are going to have a lot of stops under that level. So once we tack into that, you can see a potential for a rally. But once price gets close to this, and we went over this too in the drawn liquidity class, think of this as a magnet. Like literally, as soon as price gets near that line, there's a magnet right here, and you're just trying to long, with a magnet right under your stop loss. It's completely counterintuitive. And that's why it's important to really understand this stuff if you're going to trade smart money, because you can justify and rationalize entries, and you can see some people that maybe they're new to confirmation entries. They said, oh, well, this gave me confirmation entries. Shit doesn't even work. And just the problem was that you failed to um, really be aware of the higher time frame. It's always good to plot out the previous weekly low, any kind of buy side liquidity imbalances, any of that good stuff. You always want to plot that out and be mindful of it. So Bitcoin looking like it wants our final TP. Now, what I did was the same thing that everybody did over here, but I did it in my POI. And I told you guys this. That was for free on Twitter, and obviously we knew it in the Discord because we called out a trade. Here, I'll show you guys that. So right here, Bitcoin was right at that level. Longing Bitcoin here, stop loss, whatever the hell it was, 689. So bias behind that, we came into that 4-hour POI. We took out the liquidity, right? There was a lot of early longs all through here. All that got completely wiped. And then now that the early smart money, you can call it, is wiped out, now smart money has enough liquidity. They've taken out the previous week's low. They've even taken out institutional liquidity and institutional stops that are under that last week's low. So then what happened? Now we get the same setup you're looking for over here. And another thing too, if you were watching this, this is pretty choppy. Now, if you operate from a mechanical perspective, it gave you what you needed. There was a 15-minute break of structure because you had a low, came up, made a high because you made a new low. So then you had a break of structure. So you didn't do that wrong. But what you did wrong was your POI selection, and you didn't add liquidity into your equation. So came down here, made a low, made a high, then made a low. But remember, just like we went over with the internal structure class, we're not going to pick this as our high. Now, in this situation, you could have, but it's not the most recent candle that meets our criteria for a high, right? Because we can get a little more aggressive with this internal structure whenever we have been trending in a downwards market. So price broke that right there. We had a very easy, clean order block. The 15-minute at that point was already bullish. So I said 15-minute into 5-minute confirmation. So what I do is if price comes up into this area, this is on the 5-minute now. If we're already bullish, like if you look, we came up and we were still bullish. The swing structure here, or not swing structure, the internal structure was still bullish, right? So we came back down, nothing had changed. We didn't have to go bullish, so to speak. Maybe you could have waited for another break of structure, but mainly my confirmation method is just making sure the time frames are agreeing. So what I did was I looked right here. As soon as we got this, because then I go to the 1-minute. If the 5-minute and the 15-minute are already bullish, I go to the 1-minute. And what did we get right here? Change of character right there. That was the first sign. But, I didn't want to use our stops as this 1-minute because you can see Bitcoin hunted them, right? Now, maybe you would have got another 1-minute entry. I actually back tested this. You could have got another 1-minute entry after the second change of character here. You would have been safe. Super tight stops. They would have paid nicely. But then if you set your trade to break even after coming up here, which you probably did, you got stopped out. One thing I've noticed with crypto lately is sometimes it's if I get a good enough risk to reward, like 4R, 3.5R, I'm just going to use the 15-minute structure for a stop because crypto is really sloppy. And it's easy to almost like get irritated with crypto. And I caught myself like not really trading it as much recently because it didn't match my style, which whenever I'm trading Forex or indices, I'm using a 1-minute a lot of the time. And crypto gives really good entries like that, but a lot of times they just get wicked out. And you kind of got to adapt. And like I said earlier, you take the formula that you use, let's say like my 1-minute confirmation. If I can see that it's working but not consistently, as a trader, I'm always trying to improve things. So I'm looking at like, okay, well, instead of just not trading it, because a lot of people that trade smart money don't like trading crypto. And I understand why. I genuinely do. It's definitely a sloppy market. But you just got to adapt with it and learn that we got to use our 15-minute structure, 5-minute at the lowest, and that's going to give you a higher win rate. Now, while your trade isn't, always going to be a 40R trade, at the end of the day, I'm happy with 4R in one day. It's totally fine with me. So, But yeah, that was the logic behind this. Very simple. It's counter trend. So that's why my target was just down here in this imbalance, and I targeted recent highs. I'm not going to target. Yes, the swing structure is bullish. I get it. I understand that our swing structure was down here all the way to up here. But if you're asking me, I'm not really looking at the 4-hour swing structure and basing my logic off that, because I see this as a potential daily pullback coming to an end. Right? Where's the draw on liquidity? To me, it's pretty clear. It's these weekly equal lows. Seems like price wants to come up to this imbalance. Just need to mark this because this has been formed. But am I going to just hold my position all the way up to here? I'm not personally. I'm cool with maybe framing my ideas around, uh, you know, these levels, but I'm just going to use them as a bias and kind of like a guiding light, and then I'm going to find like the path intraday. I'm not going to get greedy. I'll probably leave a small runner, like literally less than 5% of my position, after this hits, but I'm not going to try to hold the entire position up to the 4-hour highs. Because now if the 4-hour was bullish and the daily was bullish, let's just say all the time frames are bullish. It goes hand in hand with what I was saying about our confirmation method. If everything was bullish and this was just the beginning of putting in a daily high or low, then yeah, for sure I'm holding all the way up here. But we're not in that situation. So I do think crypto does need a a little bit of relief, but at the same time, I'm not counting on it. Today's going to be interesting with the FOMC and interest rates. Let's look at did USD CAD. Damn, it wants our TP, but it's getting smacked away from it. So SPY actually is already in this zone, but I'll just tell you right now. I mean, I might say this and you go short SPY and you make money. I'm not touching this right now. Like if this was an FOMC day, I would consider shorts here, really ideally up here. But I promise you, just wait. I'm waiting. I'm not. There's no rush for me. If anything, this is a better POI anyways. I'd mark this up, and you'll probably see a little bit of reaction here, some supply absorption, but I would anticipate a minimum of this and possibly more. If we can get a nice rejection here into this zone before FOMC and then we start to move, that would be nice. But see, NOS is pushing hard. See, I'm just waiting on a lot of these. As far as indices go, I don't think that there's any kind of any rush to getting trades on FOMC day. There's I'll trade certain stuff and maybe get in a baby position on a forex pair or crypto, but indices on this day is just you're a madman. Looks like anything US 30 looks like more of a sell. We came up, we cleared these highs into this imbalance. Not really any kind of breaks with displacement though. I mean, a little bit here, but no fair value gaps. Again, it's something that I'll just be kind of waiting for. US 30 has been in its own lane lately. It really has. Like, I guess this would be a 4-hour change of character from a bullish perspective if you look at it like that. But I'd probably more of just a liquidity grab. Euro dollar. I want this zone here on the euro dollar. I've been watching this for a while. I actually tweeted about this too, but I think there's a 1-hour order block right here. Mainly what I'm looking for here is a 15-minute confirmation entry into a 5-minute, and then I'll still try to confirm with the 1-minute depending on the structure. But this looks a little bit redistribution-esque to me right there. So there was actually people saying they were going to want to long this morning, but I kind of wanted to chill on it. EU's been crazy. GU, we closed yesterday right before 5 o'clock, and I'm just moseying on. Good thing we closed it because it ended up going all the way up to this 15-minute institutional candle and definitely shot down nicely from there. That would have been a nice trip. I think that happened, during London kill zone. So wasn't up to catch that one. But this, if anybody caught this, it's going for these lows probably. I'd look right here as well. Let's look. No, yeah, just trying to see if there's another clear entry. Maybe this zone up here. I would keep an eye on this. But you know, if we come down and take out those lows, that was the trade for me, because really I was basing this around. I mean, these daily candles are ugly, but we filled this imbalance. Now I look at this imbalance right here, and there's an order block right here, which we have traded into. But I'm looking at this sell side liquidity under this low. I'm actually going to move this and just relabel this sell side, because it's already the order block already really got tapped. And yeah, this is really this is setting up to make a run to the downside. Let me take a peep at the. If you guys have anything you want to look at, oh yeah, no, one other thing. Oh yeah, there, it's happening right here. So gold now is giving me the beginning of this framework. Basically, I really wanted this imbalance down here. I don't know, 1 hour it's there, or 4 hour. It's on a 4 hour. Kind of want this still, but we did raid liquidity into this daily order block. I'll show you that on the daily. We ran right off of it. So at this point, if I can see a nice break of structure with displacement here, it looks like we're getting that right now. I want to see price trade into it and do the same thing on low time frames, because I'm going to be pretty picky with this one, just because it's FOMC day. Gold moves super crazy. Don't want to jump the gun early. If it leaves me behind, so be it. But I just gotta stay on the same energy, you know. I really wanted to come down to this fair value gap. We'll see how she plays out coming into the closer into the FOMC. Oh yeah, USD Swissy. GTP. I'd probably frame my trades around this right here. These two levels. So you've got the rest of this imbalance to be filled in this buy side liquidity there. Because you came down. If you look, we rebalanced. Price right there. So, go ahead and mark this up. So we came up, filled this imbalance. You know, price reacted nicely here off this other imbalance. So if we start to push up, then I will look for longs up into this. I don't know if I shouldn't say I would. I would look for longs. I haven't really been trading this one, but it looks good here. Seems like you're kind of engineering some sell stops right there, though. I mean, they're not super equal, but I wouldn't let it talk me out of getting into a trade. Seems like you reacted pretty nice off this demand zone. So from there, I guess really you didn't get a break of structure until all the way there, and that was not the prettiest candle that hit up into it. I don't know, this one's looking a little off, but if I can I just need some more data. This is a pretty fickle pair. It moves crazy. Hit this nice fair value gap here. That would have given you a nice little entry right up, because you can play the early, you know, like as soon as you come into these daily areas of liquidity, if you can see a lower time frame break of structure, it's not a breaker. A lower time frame break of structure, just like a recent high, not even any kind of like change of carry, just literally any high with displacement. You can trade off that. I mean, this would have been kind of a lackluster trade, but overall, would really like these lows to get taken. But if the daily, the 4 hour starts giving bullish structure, so 4 hour structure for me would be up there. So I'll actually set an alert for this. So I would personally wait for this to get taken before I would even really start framing the whole like long bias all the way up to here, or maybe into these imbalance of these highs. But it's definitely looking like it wants to come up, and the early shorts are going to get liquidated. Maybe calling that a little too early, but if I get another daily candle close like this right after this here, yeah, I'd be looking for these highs because you see there's no imbalances except up here, and then there's a clean high right in front of it. So this has actually been a super good case study. We used this for our class. Oops, wrong feed. This is what we use for the class to explain draws on liquidity. So we saw that we did this. Let's see, because I it'll take a second to find this. So look, we called this. This was down here on July 19th. I think this is actually the picture was from before, but or no, this is my thread that I used. Hold on, there's another one. Where is it? Because I posted an infographic on it. I won't take too much time. Posted this a while ago in an infographic. Let me see if I can just find the actual infographic to show you guys. Where is so it's Casper Trades. Sorry, I'm going through my files right here. Somewhere here. Oh, here it is right here. So this actually is from this chart. So we posted this or used this when it was all the way down here, right? And I literally, usually I don't like using live examples for teaching because, at the end of the day, some of us, everybody's going to be wrong at some point, and but I was pretty confident in this. So you can see that, look at this right here and this right here. We were all the way down in this area after I think it was like another candle or so, like it was before this move. But I said that, the all low is taken. We now have a huge imbalance to fill. So price is just always in the daily chart bouncing between areas of liquidity, filling orders and catering to the smart money. So what did price do? Ran up pretty high. Didn't fill all the way, but this, you just think of this as a magnet. And what could you have done? Let's just say you use this technique and you said, okay, I think it was 2 candles after this. Let's see. Yeah, 2 candles. So now you see prices reaching up for something. Is it reaching for these highs? No, there's nothing really important there. Where is something important? It's imbalance. You can also look at it like a premium of the imbalance. But you could have framed your trade around every day. You come to your desk. Let's say you're a USD Swiss trader, and you had a long bias. This is really important, and I think this is probably one of the biggest problems among most people when they learn smart money. Because let's just say that you wanted to short here. Your bias was wrong. Did this pair give you sell signals? 100%. There were sell signals at some point, during this upward movement, right? The daily structure is bearish. I'm shorting, right? And the 4 hour, let's say people down here, the 4 hour is bearish. They're shorting off this order block. It's the easiest short ever. I'm shorting, targeting here. Now, why did none of that work? Because literally you just didn't understand the bigger picture. Now, let's flip that script and say that you did understand and you said, okay, every morning that I come up into my desk and I'm this is what I'm trading, I'm looking for long entries. So let's just say you did that every day. Move the speed up. So let's just say until here, right? Until price started to break down, because that's whenever you stop. You can kind of as you're coming up into a premium of your imbalance or coming up closer, you're getting a little more hesitant. But let's just say every single day, there's one day, 2, 3, 4, 5, 6, 7. If you caught an entry on any of this entire 7 days of trading and held it through, you won. Now, obviously, there's other ways to find entries, but let's just say you had used your long bias and just traded order blocks. Let's just say all you did was just trade 1 hour order blocks this entire time, right there, right here, right here. I mean, it's that easy once you get your daily bias right. Because if you don't have that, you're gonna be in a world of pain. You could just trade the 1 hour. You could have been like one of those people that just learned smart money and they just trade every single order block, and you would have won. But it's just that it's not that hard once you are looking at things in the right perspective. But if you have some kind of emotional attachment, oh, somebody has to mute their mic. Shit, as loud as shit. I don't know who that was, but uh if you have like an emotional attachment with like what you want out of price, or let's just say even worse, let's say you're a short seller and you for whatever reason through these days, and your mind is gonna block out what price is actually telling you because your context is wrong. Once you get attached to an idea instead of like understanding the information that price is giving you, your brain literally will block out data that is right in front of your face. Like I know there's a ton of you guys who've been in a trade that went horrible and you just held it and you look back and you're like, damn, I could have did the opposite. Like let's say you were in a long or you held equity from the top in crypto. Looking back now, you're like, what the fuck was I doing? If I would have just looked at it for what it was, I could have just shorted this shit, right? So, you know, if you can look at things from a unbiased perspective and establish your daily bias just based off of price, and a lot of times it's going to be opposite of what everybody's saying. That's usually whenever you're doing this right, is when everybody's saying you're seeing different things on Twitter. Your trading buddies are not maybe you have really good trading buddies and it's different, but some of your trading buddies are not agreeing with you. That's whenever you know that you're starting to be in your own lane, and trust that bias and stick with that bias. Because if you switch back and forth and you come to your desk in the morning and have no idea what you think the day is going to do, like if you're on an asset and you can't tell yourself, do I think today's going to close higher or close lower, then what are you doing? Because you're just looking for signals to appear, and you're going to take the first one that gives you a trade, because you're just coming to your desk in the morning with the idea like, I want to trade. As soon as I see a 15-minute order block, I'm trading. Or whatever your trigger is. But the market's going to give you signals in both directions, right? Because it's not like this is some cheat code where if the market is going up and it's giving order blocks, let's just say each one of these, um, let's just actually, let me draw a different example. This will be better. So let's say that price had been coming down. Let's say we had this right here, or I'm just gonna use a tool because that thing is all squiggly. So let's say price had came down, and right here, let's say your daily bias was to go up. You just took out a really important area of liquidity over this, from this way over here. There's a daily high that or a daily low you just cleared. But let's say the 4 hour was bearish, you know, and you have no idea what's going on. You're just going to look at every 4 hour order block because you're not applying yourself and taking the time to do things right. And you're just going to say, okay, well, we're market's pumped. We're in a 4 hour order block. Then what's going to happen? Let's just say you get your 15-minute confirmation. You're being smart, and price gives you your trigger, and you're going to target this low down here. Now, let's say you took your position. You were smart, and you're targeting down the lows. It's like, oh, I'm in a good trade. And then guess what? How many times does this happen to you? Bam, right? And then maybe price started coming down. And it's because you're failing to understand that not every time the market gives you a signal, it's going to be a perfect You know, if it was that easy, you guys wouldn't be watching this video, or you wouldn't be doing anything except you'd be like on a vacation time because you'd be rich. If it was that easy, you just got to understand, really build your narrative, and then trade around that, because it's not as easy as just trading every order block or trading every fair value gap. If you have, maybe the daily bias would have told you here, you took out an old low and there was like a fair value gap up here, and then let's say you had an order block up here that never got hit, and you're just like, what is going on? You could just fix a lot of that by just zooming out the daily chart and paying attention to those levels. I know that was for a long time. That was kind of a problem with me, was when I first learned smart money a long time ago. I just wanted to trade like order blocks. It's like that's what everybody does. They learn order blocks, and then it's like they see it work and they're like, "Oh my god, this is it." Like I've figured out trading. And it works for a while, and then, you get that pain streak of like when it doesn't work. And then now you're like skittish of the market, and you're, making, I know that, or hopefully this speaks to a lot of people that have learned smart money and kind of gone through that, because I know that it's pretty common. I know I had a learning curve with it for sure. So hopefully that helps you guys. I'm gonna look at DXY as well. I wanted this to come farther than this imbalance. Looks like we're drawing up to this one right now. As DXY is just, especially whenever it's FOMC day, it's in its own, it's on its own lane. Like, and another thing too, we do have this weekly fair value gap from way over here. Let me see, because I have to. Trying to draw a line from this just to get an idea of where we're at. It's crazy when you go like this far. I'm on a weekly chart. I feel like I'm on a 1 minute. We are in this monthly supply, but what I'm really more curious about is this clean high right here, because everybody wants it, and we've even talked about this monthly supply. Everybody wants this monthly supply to hold, right? Because everybody trades order. They're like, actually, there's a monthly fair value gap. I would probably go with the weekly, but everybody wants the supply zone. This is going to be it. We've taken out the buy side. We're going down. But again, that draw on liquidity, it works on all time frames. I personally use it on a daily and a weekly for this kind of stuff. But look, we got a clean high right here, and then this gap, this imbalance. So that could be where price is coming. Also, if we look at this monthly price delivery array, or part of that, the array, I shouldn't say like that. Let's just mark these pink. You look at your most recent order block that's kind of moving with you. If you're moving up and you just traded through a down candle, it's going to be your recent monthly institutional low. You can think of it like that. That's not really, I guess that'd be a kind of a term you could use. But then what you want to do after that is you want to take a line from that candle, draw it left, and find a bearish order block that has a low that is higher than this level and higher than the high. So the thing with DXY, that's all the way up here. So we're in a really big range here, right? It's a really big range. But guess what's right near the equilibrium of that range? That zone. And this is a good example of, whenever people tell you that there's not algorithms that are kind of moving the markets, you just show them stuff like this, because that's not a coincidence. It's just not. And now, again, these levels are from 2002. So pretty interesting. This is kind of a case study for me. I want to see how this works, because you're looking at this just like anything. We have a premium and a discount of each range. Monthly institutional order flow. When we're looking at these monthly order blocks, there's a lot of money distributed from the US dollar here, right? And there was a ton accumulated here, because we're not looking at this like we're trying to trade this. We're looking at it for what it is. The same thing you should look at all charts for is this asset being accumulated, or is it being distributed? And if you're looking at the US dollar and you're seeing it accumulated, that means bearish markets, and vice versa. If you see the US dollar being distributed, then you can say that they're distributing their money into assets. But that's not what we've been seeing at all lately. We are due for it at some point. Now today, this interest rate decision, just know if if those rates come out higher than expected, just go ahead and be ready for nuclear reaction. But if they're as expected, just my advice to people when they ask me about trading FOMC is either trade with a light risk tolerance and try to get in, and really early in the morning before everything really is, taking place, or just set it out till the end. Bitcoin looks like it's moving. Did it take out this target yet? Almost. She wants it. And this, you can see once you have, prices pulling in, drawn liquidity can work on all time frames. I just use them the daily. This imbalance, that's why I put my target. I think it was a 1 hour imbalance, but price is drawing up into that. There's orders still all through there. So you can see that price, if you're playing just structure and you're not aware of liquidity, you would have said 15-minute change of character here. Oh, confirmation entry, I'm shorting, clapped. Right? Because we don't look at that as a change of character whenever, we're looking at the higher time frames that are drawing us up. And we just removed a lot of liquidity. So you can kind of protect yourself from those false signals that structure will give you and that supply and demand will give you if you're just aware of the institutional structure. And institutions, um, they don't look at structure like we do. They don't look at it and say, okay, we're bullish, I'm going to long. They create this, right? The reason this is getting created is because, maybe there is an imbalance over here, right? And then now there's lows here with an imbalance. So price comes out, takes that, comes into this imbalance, and you're bearish because the daily is bearish, and now it's going to go back up and take out the high. And that's just why you see a lot of whoa, the hell? I want to see what happens. What the fuck? I've never held control. Sorry guys, I was just interested. I've never held control. I was using the brush, but that's another way you can kind of save yourself from getting all those false signals, because you can use confirmation entries and supply and demand correctly theoretically, and still mess up. Because a lot of people, maybe they looked at this and they said we're in a 15-minute fair value gap, and I got a 5-minute. Oh, break a structure with a fair value gap. I'm shorting, and then you got in, you probably got really excited because the price started tanking. And then what happened? You got stopped out. Now you're like, this shit doesn't work. But again, it's just being aware of the higher time frames, what they're doing, and what you got to think like a bank. Like think like, if you're looking at this like a market maker, and there's you caused a sell off up here and you induced retail to buy from you, you had to push price up. So guess what? Now you've got a daily order block right here. Right? And I know it's not the last candle, but when I'm looking at the daily levels, I'm just looking at the biggest candle before the move down that got traded through. And you look after price traded through it, it did kind of come back into it. So theoretically, it could be mitigated, but it's still a level to watch out for, especially when it's right near an imbalance. So you could say that, institution, you're thinking like, okay, shit, I've got a lot of orders up here I need to fill, and I got to rebalance my books. I want to be net short. You know, um, how am I going to get back up and mitigate all these buy orders that I had to put in because what's happening in an order block, and the reason we use the last up candle before a down move or the last down candle before an up move is that smart money is inducing retail to become their liquidity. So for instance, if smart money wants to sell, they want to sell an asset off here. They're going to have to create people to buy from them. So how are they going to do that? They're going to induce bulls by pumping price. So they're going to have to put in buys. So then there's a lot of orders they have up here that are negative as shit because, yeah, they're shorting and they are net short and they have more shorts than longs. So their books are balanced. They're making money, even though these positions are down tremendously, but they're not in the business of losing money. So they're going to try to push back price to wherever those orders are in order so they can close them. So if if there's longs up here, and then that gets offloaded, that's going to be like a sell. That's why we use order blocks like that. I think Bitcoin just broke it wants it so bad. Keep watching my P&L on my phone go up, or will go up and down. Yeah, there's my rant for the day. What's USD CAD doing? Reacted pretty tough off this level here. Come back into this imbalance. Just chill on this one for now. DXY looks like it came out and cleared the sell side. It looks like it's retracing a little too. If I'm looking at this chart from an unbiased perspective, I would really like this up here. So we'll see how FOMC does with that. If I was looking at this like any asset I was trying to trade, I would be looking at this POI extremely for shorts. But we'll see how that plays out. Also, guys, something I need to announce on the server too. There's a good chance that I won't be streaming tomorrow in houses. So I might be, but I'm not sure. It just depends how long it takes to actually. What am I saying? I definitely won't be. I won't be tomorrow because I was thinking I could still my computer will be packed up. Yeah, so tomorrow will be a no-go. But Friday night should be good. I already got my internet and everything set up over there, so. See what gold's doing. Oh wow, and pushed up tough. So what I'm going to watch for here is this fair value gap. I'll set an alert. That right there, and see how price reacts. So like specifically, because this is probably going to happen, if it does happen, it'll happen after stream. But price will come into this zone, or well, I shouldn't say will. If price comes into this zone, I'm going to scale into the lower time frames, and what I'd look for at that point is give you kind of a visual of this. I'd look for price to be down in this zone and then give us something like this. Basically the same thing we just saw, but price to come down into the zone, break up with displacement, same thing. And this is what I mean whenever I say that, the formulas that we use, they're the same, right? So we have a break of structure here or here to wherever you draw it. I guess you could say right here because we're on a 15-minute now. So you could say right there. So we're looking for that right here. Same thing. And we're going to look for this fair value gap. So you're basically just looking for price to act in a fractal nature. The low time frames are showing the same because we're using this as a reversal pattern. So if we're going to find our POI, we're going to look for the same thing. Now maybe you use the order block or however you do it. I try to, if I'm using like liquidity by itself, which this play is just based on liquidity, I'm not even looking at lower time frame. I think there's a demand zone here or something, but I'm more looking at the daily levels. We bounce right off this daily order block. I mean, literally right off of it. I think it was like, what's the low? 5.6. Holy shit, somebody's loud. But yeah, so that's kind of what I would look for once this comes back down into that zone. I got an alert set. And just chill. Just don't rush anything whenever it's a day like this. If you get left out, that is better than being on the wrong side of interest rates. I promise. Yeah, if anybody's got any questions, go ahead and ask them. I'm about to get off here in a second. If not, then I'll just hop off. I just tried to click something. It didn't take me to Forex chat. I saw where you tagged me, Shannon. I don't know if he's in here or not. Oh, you want a gold 15? Yeah. Oh, you longed it. Oh shit, this is gold. You had somebody from the server actually just long gold. So it's like that's what we kind of try to do. Like we've got a bunch of people in here that are sniping stuff on their own after they've put in that work. So it's always dope to see that people capitalizing off of streams. That's awesome. I think USD CAD's gonna get it interesting. If it sees a nice reaction off these levels, we start to push up, it's going to start moving. But again, we're playing a USD pair on FOMC day. That's why when we signaled it, we played half. So he's adding me. We played half risk though. Sorry, I didn't mean to trail off. So I was just typing. Did I go over ETH yet? No, I can do that really quick. Oh shit, I'm honestly, I don't know why my computer's not showing me. I'm just not seeing somebody ask for Matic too. I'll do Matic and ETH and then I'll hop off. Somebody said mentioned something about ES and NQ both meeting POI at the same time, and now they're off a bit. Okay, so for the divergence between indices. So what we were like talking about yesterday, and this actually played out nicely. I ended up taking a sell on it, but this is a different wrong chart. US 30 is like, I swear this was so stressful of a trade. It was like, but basically what we look for whenever we're looking at sister divergence is basically highs and lows. So I wouldn't really look at it as POIs. I would look at it like, so go like maybe like, I don't know, whatever time frame you're using. I would take a 15-minute or a 1 hour and say, okay, well, the US 30 here has made a higher low here. Let's see if I don't think there is any divergence this morning. So let's just say, or we'll go back to yesterday actually. That'll be better. Let me delete all this shit. So this was yesterday morning. So the US 30 had made a higher, I think it was right here. 15-minute, I'll probably show this clear. Had made a higher low, while everything else, if we go, let me do this so I can actually see the times. So right here, we see on every other indice, everything obviously made lower. It was just dumping. There, like we could say this was, I guess, our lower low. And then back over here, we had made a lower low as well, right, on all the indices. Prices going down, except on US 30 prices going up. So you could say that the US 30 is being distributed, and that's exactly what we saw. So that's kind of, wow, NOS literally hit into that zone. That's ridiculous. Yeah, that's what I was saying. We blasted through that zone. I wouldn't even have, that's SPY. Wow, SPY even went, that's crazy. NOS was moving quicker. But yeah, the divergence I would use is if we're making higher highs on two of them and not on the other. God, that shit snacked. I'm gonna chill on this, but I could see a push down leading up to FOMC. ETH. So Ethereum daily. We went over this a little bit. We wicked right off that daily imbalance. Now it looks like we're coming up to this imbalance right here, at least into a premium of it. I don't know why it wants to start off with like this bold ass lettering. So I would look up here. There's a daily order block right there. It seems like, I don't know. It's kind of, I would be more pay attention to the imbalance. we went under this previous week's equilibrium. Overall, for me, I mean, this looks terrible, if you want my honest opinion. If Bitcoin, I think, has a little more upside, we could see a push up and stop out these early shorts, fill that weekly imbalance, because the weekly, it's really close to this imbalance. It's a tough one because we came under this last week's equilibrium, so that's not usually a good sign. You don't want to come under this, because what that's showing is that price is not really very bullish. It's maybe not pulling towards that weekly draw on liquidity. But um, if Bitcoin starts to come up and take the high or anything like that, I would look for this to do the same. So really, buy side liquidity, I could mark this as well at this high, because there's a lot of people selling short. So we've got that right there, and we've got this imbalance that we're pulling towards on a daily level after we filled this. And again, it's just playing ping pong. Daily imbalance, price came out, took the sell stops, came into the daily imbalance. Price is pushing up, come to this daily imbalance. Then you revisit it. That's kind of what I would be looking for on Ethereum. And after you come up and clear this and get into this range, I mean, I'm going to be gearing definitely to look for some shorts, because you got these equal lows here, and then you got sell side liquidity under this major low. Tons of institutional stop losses. A lot of people that bought this dip, they're going to get out if we start to make lower lows. This is a huge pool of liquidity right here. That's going to be an overall objective once we get up into these areas and start to reverse. So Matic. Oops. Let's go ahead and just mark all of it up again. Looks like you've got some equal highs right here. Some buy side liquidity and an imbalance over here. This is kind of probably not that too much attention just yet. Main thing I'd be paying attention to is right there. I already went on to the last week's equilibrium. When I'm doing these last week's equilibrium, I'm doing the body. I'm not even going to mark it because we've already cleared it. But the weekly looks like it could come down for sure. I would watch price here for some sells potentially, but again, you just want to make sure you're agreeing with the rest of crypto. I'd refine this all the way probably down to a 1 hour. I'd just leave it there. I'll actually set an alert for this. A lot of equal highs up here, so you want to get a confirmation entry. It would be ideal if these get taken, but this looks like a potential zone where we could take it down this weekly imbalance. Now one could look at it like, okay, well, I want to trade up to that. That may be your style, right? It looks like right here you had a 4-hour change of character. 4-hour structure is very clearly bullish, and you got a fucking massive range. It'll be all the way down here, because for me, here was your last swing range, and you didn't get a break of structure to all the way up there, and no real pullback after that. So this is all one swing. If you look at that weekly imbalance, is also in a discount. We've got a 4-hour order block sitting right on top of it. So what I would look for is a potential sell entry somewhere to, if you're going to trade counter 4-hour trend. I think you're trading with the daily and the weekly though. If you're looking to sell up here, if you fill this daily imbalance, come up into this 4-hour institutional candle, fill that imbalance, you maybe get let's say like a 4-hour change of character here, this kind of action right here. Look for this kind of move, and I would take it all the way down to these lows, and then I would look to be a buyer here. This is actually a really nice setup. I haven't looked at Matic in a while. And that's kind of how I like to build my narrative around something like before I really, because a lot of people, they just go straight to 4 hour. They're gonna be like, oh, 4 hour order block wherever. Now, I guess in this situation, you'd look right here too. But that's why it's important to me to really um, develop what price is doing and why it's doing that. Yeah, guys. On that note, I'm gonna hop off here. I appreciate you all as always. Somebody said my trade I posted earlier, they don't get the entry. If you want, you can rewind this video to the beginning. We went over it in full, but yes, it was off a fair value gap, and it was based off of the daily chart as well. So I won't go into that all the way. So sorry, but you could you can reference the beginning, like the first 10 minutes of this video. Sorry, I didn't see it where you asked in the Discord. Do I risk 1% on Forex? I usually do, but how I announced this one, I was only risking 0.5% or half my usual risk, which is 0.5%. And yes, when you sign up, when you sign up at Playbit, you get access. Of course, that is the Discord. Mushy mush. Make sure you use my code though. You get a discount if you do. Yeah, awesome. Well, I appreciate you guys as always. Won't be on here tomorrow, but Friday there's a good chance that I'll be able to make it. And Saturday we'll have our educational class in the private Discord as usual. So thank you guys too. Have a great day. Be safe out there for FOMC. Please don't get fucked. Anyways, I'll see you guys later. Peace.